Even. Good. Oh my God, I messed this up so bad. I wanted to say good morning and then we're live, but it came out as good. Welcome in, everybody. Make sure you can see us okay. Make sure you can hear us okay. We have an amazing panel today, y'all. There's so much to talk about. We were literally, the reason why we're a little late is because we couldn't get ourselves to stop talking before we went live. And so this really lends to really good. I think it's going to be a great day for us to talk about. Or things to talk about today. We got Richard, we got Hans, we got Brian. Thank you all very much for joining us today. I'm very excited to really hit the topics that we have. We're going to do about an hour and a half here, and then after the hour and a half, we're going to take it to my private Discord and discuss further wherever we leave off after the discussion. If you want to be part of that discussion, consider becoming a patron or signing up through YouTube right below. But yeah, let's just get started right away because there's so much to talk about here. I'm going to have producer wife bring up a tweet from Sawyer. If you want to go into the DMs on Discord, babe, and pull up Sawyer's tweet, it should be like the second message I sent you today. There is China price cuts. China went ahead and processed some price cuts today for Tesla cars. Breaking from Sawyer Merritt. Shout out Sawyer, always on top of the ball here. Tesla has reduced their price, the car prices in China. Here are the new starting prices in United States dollars. Model 3 rear-wheel drive is down about 11.7%, down to $33,000 equivalent. Sometimes we forget just how cheap these cars are in China relative to US prices. Model 3 Performance down 5.7% to $48,014. Model Y Standard Range down 10% to $37,826. Model Y Long Range down 13.4% to $45,103. And Model Y Performance down 9.5% to $52,381. If only Tesla had these prices in the US, the Model Y 5-seater could get the IRA tax credit, but obviously it doesn't work that way. So, and there's been some reports as well around sort of the demand and what's going on there. I sent producer wife a couple of videos as well when she has a chance to pull them up, if you don't mind adding them. But let's just go down the list. Let's go Richard, Hans, Brian. What's your take? I would love to hear what your thoughts are here. Positive, negative. What's going through your mind? Let's kick it off. Go ahead.
Yeah, so first of all, I'm going to talk about MMTLP later. So that's why I'm going by that designation today. But I see the price drop is excellent because it's going to increase sales, and that's the issue. So margins probably will drop for a while, but they'll increase market share. They'll be able to compete more directly with BYD. BYD seems to be like the only one who has their act together in China. Because I saw, for example, NIO just came out with a new product, and the first thing they did is they recalled all the cars, the ET5, like 1,000 units of that. So I think ultimately it's going to increase sales. I wish there was a $33,000 car in the United States. And, when Gary Black talks about, we've talked about the $30,000 and the $25,000 car. If they keep on cutting prices, we're going to be there. And obviously the new, whatever the new platform is, that would seem to be the slam dunk for getting to that next price point and keeping the margins at the same level.
Hans, what are your thoughts?
Yeah, I mean, we have a below $35,000 Tesla. Like, that should be breaking news. We're finally, it was kind of semi-available in the US for a little while, but like now this is something that's easy for everyone to access, that's in the design studio. I think that's a good thing. Honestly, we've just got to go take it back to what Elon has said in the past. Prices were embarrassingly high, and a lot of that had to do with supply chain issues and inflation. Don't forget that as they're increasing production, that they're drastically reducing their cost of goods sold there. So yes, we may see a margin hit, but it's probably not going to be as bad as some people might anticipate based on the price drop. But ultimately, the mission of Tesla is to transition the world's to accelerate the transition of the world to sustainable energy and sustainable transport. This is a great step on that path, and I'm excited to see what this translates to in sales numbers. It does raise questions on what's demand like in China. I think that the interview that Matt and Emmett did the other day with the employee from China that worked with Tom Zhu was great, and it did kind of paint a little bit different picture than we get a lot of times here in the United States of perhaps the brand damage that was done to Tesla in China during the whole thing with the brakes. That was really concerted effort to smear, like just a concerted smear campaign in China against Tesla. But I think that as they continue to deliver high quality vehicles, maybe at reduced prices, and especially once they announce and reveal the made in China for China market special third generation platform vehicle, that will go a long way for Tesla's brand in that area. Overall, I think maybe there's going to be some turbulence here. I'm excited to see the progress. But that doesn't necessarily mean that I think this is going to translate to great headlines in the United States, or investor sentiment getting super excited.
Brian, what do you think?
So I've done an analysis before on or gathered the data on the different pricing segments. It's funny that people who cover the analysts who cover the cars don't, they look in car segments before for ICE cars, but they don't look as much for the EVs and stuff, because they'll say, okay, $40,000 and up cars. By my analysis, Tesla always had 40% or more, like 67% in the United States, 50% in Europe, and 40% in China for the $40,000 market. And then now that they're dropping down to 33,000, the clean technical link I put in there that has BYD sales, the BYD Seal is an EV car that's quite comparable at about 31K. BYD Han is about $40,000. But it's not just BYD. It's like Tesla didn't have all of the $40,000 and up cars in China as well, because they had a bunch of other competitors, NIO and other stuff like that, and also Mercedes and that kind of thing. So when they drop down into that 30,000 market, I roughly estimate that it does double the total addressable market that they're looking at when they drop down to $33,000. But there is a hit on margins. If we were to ballpark it and say it was half, worst case say down to 10% of it, that's for the domestic cars that sell into China, right? Which about 1/3 of the cars, right? So you export some to Europe. You have Europe-made Berlin cars, and then you have Austin and Fremont, which have the same $500 tax credit. So the more pressure that Tesla is under, the more important that same $500 tax credit and the other tax credits for the other products become. There is some reset period because Tesla's doing these actions where they can manage it, but it's kind of thing where we have the 3-month, 4-month delay on what the margins are. Like we don't know until January 25th what the margins were for Q4. We don't know until April 20th or whatever what the Q1 margin end up being. So it's something where the proof will be delayed for them to just say, okay, our margins are still okay. We're able to manage it. The increased volume means we take off a couple percent, improve margins there. So there's many things which I think it's a good move. It will increase their sales closer to potential. If they ran flat out with scaled Berlin, Austin, and Shanghai, they could do 2.6, 2.7, maybe 3 million vehicles this year. But we have this adjustment period, and there's big problems for potential recession, and also the potential for repos on used cars that could have pricing hits here. But they have the manufacturing advantage, the thick margins to begin with, and the Inflation Reduction Act to help them. So that's my take on that.
No, that's all three of you excellent takes. I think the way I view it, and thank you for sharing this link, Brian. So producer wife has it up here. These are BYD's top selling cars in China. I guess is really their own. I guess in the Asia Pacific market they sell, but this is how many they've sold in the last year in 2022, and this is January sales compared to December. And I also have producer wife bringing up some pictures for each one of those top 3 models, so y'all can see what it looks like. So the BYD Song, this is the BYD Song Max Pure Electric to launch this year, so it already launched. So this car is their best-selling car. and they sold roughly 79,000 or something in December for the month. If you go to the next one, the next cars picture, if you can bring it up while you're working on it. Perfect. So this is the BYD Han. So this is the second best-selling car in China. 0 to 100 kilometers, which is I guess 0 to 60 miles per hour, is 3.9 seconds. 521 kilometers of range. Now, the one key thing to keep in mind here is that each country does very different. They measure range in a very different manner, and some countries are very, let's just say, they're very willing to give you the benefit of the doubt from an efficiency perspective, and some other countries don't. So I think the U.S. in comparison to China and Europe is especially strict when it comes to stated ranges. I think Europe and China are both very they're usually inflated by about 10 to 20%. And then the next car, which is so there was the Song, the Han, and then the third one I believe is called the Yuan. Thank you very much. And so this is the third best selling car in from BYD in the Chinese market, which I forget how many they sold. If you can bring up the initial list there, producer Wef, so we can read it real quick if you don't mind. 29,000 units in December. So these are the top three cars that I guess, I don't know if necessarily they're competitors to Tesla. Really the only one that sticks out to me as a competitor, just based on just looking at the car and the form factor, the Han's probably the closest to a direct competitor to Tesla. Yeah, so that looks a little bit more premium. The other two looked much more like a Volkswagen Golf, Volkswagen sort of like, like maybe a more mass market type competitor. But regardless, if the Chinese market's going to be in a situation where folks want to be able to afford a cheaper car, then lowering the prices seems to be a pretty big positive for the Chinese market, as long as, like to Brian's point, if they can maintain some sort of margin that let's say from an investment perspective, the Wall Street's going to be happy with. And that's going to be the biggest question going into 2023. What do these price decreases imply from a margin perspective? Go ahead. I see a couple people coming off mute here.
Yeah,
I was just going to mention
real
quick.
Go ahead.
Yeah, sorry. That Leon Wu, he was the guest that Emmett and Matt interviewed the other day about Tom Zhu, but he made a point, which, it's a single point of data that you may not want to take too seriously, but basically that, Tesla has a brand image that is among like the premium brands in China, and that it may have taken a mild hit in that segment compared to other things, but that BYD, like the Chinese consumer, does not see BYD on a level playing field with Tesla in terms of brand, and they're very brand conscious. And so as Tesla does start to compete more and more with BYD head to head on price, they definitely should have, if Leon's assessment is accurate, a very significant brand advantage when going against BYD. So anyways, that was just one minor point that I wanted to raise.
Sure. And just a heads up, Hans, I think your mic switched over to your AirPods for some reason. So maybe look into that. Yeah. Go ahead, Richard.
Yeah. So I was going to say is I think the bigger issue is I understand that BYD is operating at like a 4% margin. So I think with those margins so low, that makes that new platform even more important, because again, if we can reduce the cost by 20% and get under $30,000, then I don't think BYD can compete with the price and make money at all. And the Chinese government, I'm sure, is going to subsidize them to some degree, but they're not going to continue to subsidize an ongoing losing enterprise. So I think that Tesla has to undercut in price, because I think from a cultural standpoint, the Chinese people don't like to feel like they didn't get the best deal when other people are doing better. And I think that kept Tesla from maybe accelerating the growth in China. The other thing I was going to say is I've been seeing like financial economists talking about GDP growth in 2023, and the United States is very obviously flat or in recession. Europe is flat, but China, they're still predicting a positive GDP growth over 4.5%. And if that's the case, they'll buy cars in China. And so that market will become really important, I think, especially during a recession in the United States.
Well, what's fascinating about the Chinese market is, for the last 2 years, their zero COVID policy has been quite a severe sort of cap on their ability to grow as fast as they want. Right? Anytime there's any sort of outbreak, boom, shut down factories. Anytime there's any sort of outbreak, boom, shut down the stores and everything. So now in 2023, theoretically, now that the zero COVID policy has been reversed, and now everybody and their mother is getting sick right now in China for the next probably like the next couple months, in theory, exiting Q1, whatever I'm going to call it an artificial cap, whatever artificial cap was placed on China's growth will lift, which will allow the government in China, and again, I'm not super familiar with the with the government and the culture and all that stuff, but it seems to me that for the last 20 years, the Chinese government, it's all about growth, right? And now in 2023, any sort of artificial cap you had in place is now gone. So now it becomes from an automotive industry perspective, it becomes I think the equation will be who can grow the fastest in 2023. And that's directly linked to pricing. Go ahead, Brian.
So in terms of the BYD brand, so people don't get BYD started before Tesla making electric cars. So they were kind of the first, and then Tesla passed them when they got the Model 3. So they didn't pass them until like 2017. BYD had, that was just on straight electric cars, and they're always making gas, hybrid, and electric cars. They dropped the gas cars. They also had a reset around 2019, 2018, where basically they went from a bunch of cars to practically nothing. They had like several months of like almost no production. And it was because they had to like refresh and put out new vehicles because their old ones had problems, right? And so they had a certain bad image that they overcome. But the fact that they got,
Sorry, this is BYD?
BYD had that
okay.
problem. So that's one of the advantages they have. They overcome it clearly. The China market has mostly forgiven them, or at least new buyers, replace dissatisfied old buyers, that kind of thing. So they, have clearly come on strong and are clearly the second strongest competitor, although with admittedly low margins. But I think the price cut takes some from BYD, but it also takes from everyone else, like Volkswagen, all the other car makers, ICE cars, other things. So it's the overall, doubling the TAM, going from 30% of the market to 50% of the market, and getting whatever share from that. So I think that's where the thing comes to end. So I think it will be a net positive, but it's, we have still 3 to 6 months of proving that it's all okay, because basically the market's giving no benefit of the doubt to Tesla. So until the proof is there, it's kind of like all those people say efficient market looking forward. It's clearly, if they're looking forward, they're looking forward in fear right now. So there's a bunch of stuff that's not going to happen until it's proven that yes, this is working. Here's the numbers. Here's the dollars. Here's the margin. So it's going to be some delay before it happens.
Yeah.
And Warren Buffett likes BYD. He even though he reduced his I think his holdings in it, he's still in it, so he likes it, and he's made a ton of money in it. I know. And I think BYD was originally more focused, and I think they still are more in like the commercial. They produce a lot of buses and things like that, in addition, that Tesla doesn't address.
Right. Go ahead, Brian.
One of the things in terms of like China's GDP and stuff like that, one is they do cook their numbers a fair bit. We also do it too, in terms of like what's our real inflation number, what's real interest rates. You change the number from the 1970s and that kind of thing. And China has even more. They were always focused on growth, but now it's a little bit more focused on what's good for Xi Jinping, as opposed to what's good for anything else. So that he's willing to crush Alibaba and anything else just to maintain his own personal power. But I think that if he gets, they've had the turn where they start stimulating the real estate market. They had a property bubble and debt bubble problem, so they started stimulating there. So it looks like, based on evidence, that they are going to try to get back to growth. They're lifting the COVID restriction like you're talking about, and then starting to stimulate the economy. So I would see more stimulus happening.
Yeah, those are great points. And then producer Wef, if you don't mind bringing up the ticker right now for Tesla, because the price movement today has been fascinating. We were talking before we went live. There's like a total of almost a 20% move total, down and upwards. If you can bring up the ticker here, the conversation around the Tesla's price cuts and BYD and these companies really becoming almost going to a price war now. I guess in my head a little bit, I'm thinking about it as a price war, but it's just really maximizing your capability of selling into the market. I fear the most, like the points that were made here, for legacy auto. Like a legacy auto in China, it's going to be a very interesting thing to follow, and seeing how this is going to turn out to be a potential somewhere we can see to be like, okay, this is what it looks like, what it's going to look like in the next 5-10 years in the future, right? So like if you take California, for example, and how quickly and how vastly electric cars and Tesla specifically became the most, it seems like they're literally freaking everywhere. I wonder how much the Chinese market is going to be analogous to the total global market once EVs truly become affordable so that most people can buy them. And if it really does become the case, I had Alex on Monday, Alex Voigt, for those that follow the channel. He covers mostly the German market. If I remember this correctly, there was a number he said that Volkswagen in China's sales is down like something like 30 to, I forget what the number was, but they're down a lot. And BMW and all these brands are down a lot in China because of players like BYD and Tesla and these other competitors coming up that are heavily invested in the next generation of auto, which is in this case is electric vehicles and some hybrids, but mostly electric. So that is going to be a story to follow for me in 2023. And I think this Tesla price cut, within the context of how people view this as a negative for Tesla, I couldn't see it more as I see it as a positive for Tesla and a gigantic negative for anybody who's not BYD or a Chinese automaker where the government's going to be able to stimulate and push forward. This is really bad news for Volkswagen, BMW, Mercedes, GM, Ford, et cetera, et cetera. And I'm curious to see if maybe this is the market waking up to that fact, but I doubt it. Tesla's up 1.43% right now. It was down almost 10% at the start of the market. We have a 10% rebound here through the day. Any thoughts from the panel? Go ahead, Brian.
Yeah, so I see that the S-curve adoption, technology adoption curve, which is shaped in S. If you look at that curve closely, the 5-10% point, when you pass that, then you're into the sharper, faster phase. And China's up around now 30% in terms of their thing. So it seems like it's going to be like 30% last year, 50% this year, 70% the year after. It's like we're in that really the whoosh phase where, if you're on the ICE vehicle side, you had 7% of the vehicles are ICE last year, and then this year you dropped to 50, so you're dropping like 34% again. And then if you drop to 30%, you've dropped to less than half from your 2022 level in 2024. And in terms of like people who say, well, production, manufacturing, it's like China's got like 30 or 40 electric car companies that they're going on, not just BYD, but like NIO, WLT. There's a bunch of others. There's like Geely, all those other guys. China has more of its own domestic EV players, and China, Tesla has its factory there, so they would want EV to win on that side, because they also have more supply chain. They're making 80% of the batteries now. You may change a bit with the Inflation Reduction Act, but they have most of the batteries. And the major battery players, I looked at their goals. They want to get to, they started building the factory. They put $200 billion in to make 2 terawatt hours of batteries in 2025, which is enough for 50 million. It's not just all of China's cars, but all the other cars in the world, and energy and other stuff. So we're at 600 gigawatts here. So they not only have the support of the car makers, but their batteries, they're all in on the industry. Like they like batteries, components, the whole thing. So, and then that shift, if you make all your cars EV and all your trucks EV, then you're cutting out 5-6 million barrels per day, 7 million barrels per day of oil. China uses 13 million barrels per day of oil, imports 10, almost 10, and produces 3.5. So you make that electrification shift, you're tripling your equivalent of tripling your domestic oil production, because it goes from oil to coal, nuclear, whatever. They make the solar. They're also biggest on solar panels as well. So everything for their shift is they want to go all in on that, and they are all in on it. So yeah.
Good, Hans.
Yeah, I mean, based on what we've heard Sandy Munro talk about, that they had over 300 electric car companies at one point, and just based on the fact that Xi Jinping went all in on electrification a while back, and so he's kind of organizing their economy to really pursue this. And I think what we're seeing is basically the fact that the Chinese automakers, like, this is basically the SEC of EVs, and there's going to be an incredible amount of competition within China to come out on top. But whoever wins among the domestic Chinese automakers, like, they will be able to go into the rest of the world. As right now, they're going to solely focus on supplying the Chinese market until they have basically completed their goal for transitioning domestically to electrification. Once they've done that, then their expansion will go global, and they will be positioned, relative to a Volkswagen, relative to a Ford, relative to a GM. It'll just be like NFL players running over. Yeah. Yep.
Yeah.
So
I think you
that's kind of
mispronounced
what I
Big
foresee.
Ten, by the way. I think you mispronounced Big Ten. I know you meant to say Big
we'll
Ten.
see. We'll see about that. I would say history would say otherwise. And I'm not an SEC fan, but I live here, and I know how they trounce everybody.
It's not cool, bro. For those that don't get the reference, the SEC is the best league in college football, but I don't believe it as a Penn Stater. Richard, I saw you going off mute, then we'll go to Brian.
Yeah. So I'm going to get the chance to explain what MMTLP is here in answer to your volatility question. But before I kind of go into that, actually what happened in China is they had too many OEMs. And in 2021, I think it was 2021 or 2022, Xi kind of encouraged consolidation because he thought it was going to be a much more efficient process as opposed to having 1,000 OEMs, you had 500. So it's interesting to me that as opposed to expanding, they kind of contracted in a way and tried to reduce cost and inefficiency. So MMTLP, and I spoke to Farzad about this beforehand. So this is the issue of a systemic problem that impacts Tesla, I think, more than any other company that is traded. And this is straight stock, not a business. So we're kind of looking at it differently. And I'm going to give you like a very brief fact summary, and then I'll cut to the chase what the real issues are. So there's a company, the company is called Torchlight. It gets into a merger with another company called Metamaterials. As it turns out, ironically, Metamaterials has an office next to Tesla, I think in Canada, just inadvertently. In the process, Torchlight, who merged with Metamaterials, which is MMAT, issues a dividend, a preferred share in that merger process. That share is called MMTLP, which is the symbol I put on there. Without consent, sometime later, market makers, with the consent of FINRA, let that MMTLP preferred dividend trade on the over-the-counter market. It wasn't supposed to trade, but they permitted to trade. During this process, the market makers create millions and hundreds of millions of fake synthetic shares. They short the stock, they create all these fake shares. Eventually, we get to December 8th. So I bring it to this time forward. As of that point in time, if you owned MMTLP, you would get the dividend stock, which was in a private company, which was an energy company. And the 9th and 12th were supposed to be for the shorts to cover their positions. Now, in this case, there were hundreds of millions of fake shorts, and there was a specific date by which they had to cover and close their positions. So everybody believed that there'd be a short squeeze because there weren't enough shorts to cover, and you could only cover, you couldn't sell in effect. So what happens on the 8th? FINRA steps in, they issue a U3 extraordinary circumstance halt after the stock had moved from $8.25 at the start of the day to $2.89 at the end of the day. They don't permit the trading. They don't cause the shorts to cover. And as of today, we are January 6th, the stock is still in limbo because nobody knows what to do. They don't know how to cover. And the ultimate problem is, and this is the problem systemically, and that's why Tesla moves 20% in a day. Maybe today there's short covering. When they hit 101, maybe the shorts thought, wow, it's a cheap price, let's cover. And they got out, and maybe that's one of the reasons why we have a 20% move. But the problem is, these are fake shorts. And once there's a tactic by which they can move these shorts outside the United States. Once they're moved outside the United States, when the regulators look at the short percentages, they don't count those shares. So let's say Tesla is really 10% short, it might show 5%. And when it shows 5%, there are algorithms that kick in to re-short it. And that process continues to happen. So, and this is artificial. And everybody who's on margin might be in a margin position. They get margined out. And beyond that, what happens is until the shorts actually close their positions, they don't have a gain. So they don't pay taxes on it. And they're laundering money. So, and how do we know that? How do we know that the shorts are doing better than other hedge funds that are doing it a more standard way of business? Because yesterday, I think it was yesterday, Citadel came out with their earnings. Whereas in 2022, all hedge funds trading long and short had an average gain of minus 13%. Citadel, who is the king of the shorts in 2022, their fund was up approximately 39%. That's no accident. And all retail shareholders are getting screwed in the process. So MMTLP happens to be an ongoing example of this, but Tesla's price, every time we see it go down like 10% in a day, that's not by accident. Those are algorithms kicking in, and that's shorting of illegal shares. Very difficult to prove, but there's a movement out there that is interested in getting those market makers and the regulators to take notice and to act. So I would encourage everyone who owns Tesla stock to take a look at MMTLP just to get an understanding of the process, and then become familiar with the synthetic shorting process and how it impacts Tesla. And I really think that we as a group, as Tesla shareholders and all retail shareholders, can really influence regulators, Congress, etc., to stop this practice, which is harming all of us.
So let me just recap here. Thank you so much for going through that. I feel like we're just getting grassroots movements all the time out of this channel, which I love. Let me try to recap it in a way that maybe sticks better to my brain. So there's an example in MMTLP that there's some sort of shadiness going on with shorting, synthetic shorts, basically a lot of like super shady activity where there are people that are using this shady activity to force the stock to come down in an artificial way, which allows them to make a ton of money. And this activity is not really available for the regular public to see because they have ways to hide it, right? And so MMTLP is an example of this being a kind of like an example of it going to the extreme where now it's halted and people are like, what the hell's going on? I don't know how to cover my short. But there could be some evidence, hard to prove, like you said. Just FYI, Richard is a lawyer and he has a law background, and a lot of the stuff he does is, he knows how to look at stuff. Just an FYI. So there might be reason to believe that the recent price moves with Tesla in, say, the last few weeks, the last few months, where there are these very aggressive move downwards. Perhaps the market, was saying, hey, let's sell some shares. But there could be an additional pressure or more movements that are caused by this synthetic type of shorting, which could put artificial downward pressure, and people are able to profit out of that artificial downward pressure. Did I sort of recap that correctly, Richard?
Yeah, not only do they profit, but they don't pay taxes on it because they don't close their positions, and they're in essence laundering money offshore. Because until they close their positions, they don't have a gain. And so they can just keep the positions open. And a lot of times the shorts are shorting companies that are in precarious financial position. And if the company goes out of business or files bankruptcy, they in effect don't ever close their positions, and they may not ever declare the profits they had. So it's a huge issue, because think about it. All the tax revenue that we don't get into the coffers that should go in, that increase the amount that we have to borrow, that increase the interest costs, that increase inflation. It's really I think it's a huge issue that gets buried because the insiders profit.
Hans or Brian, any sort of like reaction, thoughts around what Richard just said? I have a lot, but I want to make sure I open it up to the panel too, if you guys want to add anything. Go ahead, Brian.
So I think that Tesla's the share price is in a clearly vulnerable position, for the next 3-6 months kind of thing, just because in order to fight anything like this, like one, Tesla has cash, $20 billion in cash, even with lower margins, still making money. Even if they went to zero, like I think farther you looked at that, where they went to zero margin just to grab share and stuff like that, then they're fine and they come out. They need to, execute on something really huge in order to break the narrative. Like basically, when just like those bear traps and other things like that, where you start something really huge happens, and Tesla has huge things that can happen. Energy becoming profitable, FSD coming off beta, and then offering that a bunch. So there's several things that can happen, but I don't think it can be just ordinary execution on cars and production there, because it can be that, but that would take 9 to 12 months to get to a big enough story. If they come in, at 500,000 cars with 20% plus margins in Q1, that could be revealed in April. So that would take 4 months to get there, right? So there are things that can happen to defend it, but right now, because of they're able to generate the story that there are some real concerns around China's demand. There are real concerns about China's economy. There are concerns about the global economy, recession. So those within that environment, what Richard was talking about is something where they can make that work. But Tesla the company will ride through, but you have to be able to withstand this share price manipulation until the Tesla can totally change the story. And Tesla can do that, but it's like it could be this unknown bottom level, because they can just force the share prices down. And the whole valuation of the company is only based on the last shares traded. So it's the kind of thing where you can have these wild swings and manipulation. When we get a bit more mature with trucking and energy and all those other things, and the subscription revenue, then this kind of effort, you become more immune to it. Although I think that there'll still be these huge swings, because basically it's like you go up 10 times because Model 3, Model Y become profitable, China has production, but then you drop down 3x, 4x because there's doubt about the China story. So and also doubt about the margin story. So they're basically taking away some of that, and some are saying it won't come back. So that's these huge swings, and because Tesla is so exponential in what it does, you can have, even as it's growing, it could go, instead of 2 steps forward, 1 step back, it could be 10 steps forward, 10x up, 5x, 10x down, 100x up. It's like these insane swings for something so huge and so transformational. But yeah, that's my reaction.
So essentially the MMTLP situation is just adding fuel to a fire that's going downwards, and that's what's could be causing a lot of this craziness with this. I think what's interesting to watch too is that Tesla, at least in the last 9 months, it is tracking somewhat with like some of the growth stocks. It is down 70%, it is down 75%. What's very interesting though is that its fundamentals are just so much more different, and these 10% swings that are just so wild, it does bring up a lot of questions. And thank you, Richard, for doing the diligence to go on and do a lot of this work to kind of try to figure out what the hell is going on, because this EV tax credit that I've been covering on this channel for the last week or so, like there's just so much shady stuff everywhere, and Tesla seems to be a freaking piñata for a lot of these. So it's like, if you follow the Tesla story, you can kind of be exposed to a bunch of shady shit. And it's like, okay, so if this is going on and that's going on, why wouldn't the thing you just described be going on? Like if people have enough power and money, some crazy stuff happens. And that's what I'm learning as I'm getting older. It's like power corrupts absolutely, as it said. So Hans, sorry, Richard, and then Hans, if you have any thoughts.
I'm sorry, Hans. I stepped on you. I'll let Hans go, and I'll go.
Uh-oh. Is he going to find his mute button?
Yeah, the only thing that I was going to add earlier is, I don't, part of me wonders how much of this is just people who are very sophisticated, who have been in the public markets for a long time, increasing their level of sophistication. But part of it feels like there have been a lot of people who've had a playground with how to maximize a grift in crypto, and they're bringing those playbooks to other arenas.
Interesting. Go ahead, Richard.
So what I was going to say is, if you look at hedge funds and you look at their leadership teams, and then you look at their general counsel, you'll often find that they're either from FINRA, SEC, or whatever. And so there is an incestuous kind of relationship amongst all these companies, which in effect, they protect each other and insulate them, which makes it hard. You have to really, really press to kind of move things.
Yeah. Maybe this is a good segue into the one chart that Tesla Economist posted a couple of days ago. If you want to bring that up, producer wife, it's the last link that I sent you on Discord, where we're talking about Tesla stock. We're talking about the sort of a lot of the craziness that's happening around the price. By the way, Tesla Economist, shout out to Lee. Lee has been on the channel before, but he in the Tesla community has been subject to a little bit of controversy. I don't want to necessarily attack the individual or question the individual's intention, but I would like to kind of throw around the ideas and discuss the ideas. So this is an example, and somebody smarter than me helped me describe this. But how the market clearing price is affected when demand is dropping and supply is increasing. Then there's like a bunch of lines on a graph. Hans, are you able to sort of explain this for us a little bit better? I think you're the one who brought this up.
Yeah, this is basic Econ 101 stuff for anyone who's had Econ 101. You've got a demand line, which is the line that moves from the upper left towards the bottom right, and then you've got a supply line, which is the line that moves from the bottom left to the upper right. And so as your demand, like increases in demand, would be that demand line moving from the left to the right, but decreases in demand are moving that line from the right to the left. And so you see that D1, D2. So that is showing that we've got demand in a recession that's coming down. And so you move that line over to the left. And then if you're increasing your supply, it moves to the right. If you're decreasing your supply, it moves to the left. And so when we were in the pandemic, we had the supply line dramatically shift to the left. And then because especially gas prices were so high, at least for electric vehicles, we had the demand line shift towards the right. And so that's when the the market clearing price is the intersection of those two lines. And so you can see like the D1 and S1 line, we'll say that that's the demand at the prices that we had in, over the last 2 years, where the entire auto industry was just printing, they were able to sell prices or cars at prices that were just ridiculous compared to previously. And that's because the demand line had moved to the right and the supply line had moved to the left. And so you've just got a lot more dollars chasing a lot fewer goods, which creates inflated prices.
And that's the intersection of S1 and D1 with the top intersection, right?
Exactly. So then, now that we've worked through all the supply chain issues, we've got a lot more supply. And then from Tesla's perspective specifically, they've been growing as a company. They're ramping production. So they had a somewhat artificially suppressed supply due to part shortages, but not nearly as much as anyone else. Theirs was mostly their growth got slowed down a little bit, but they've hit, okay, now we've got all the parts that we need and we're ramping up our gigafactories. And so they're moving their supply line significantly to the right. And then if there's a recession, now the demand line is moving back to the left, because it doesn't matter if it's a gas car or an electric car. Like, I just don't have money to buy cars. That means overall demand is lower. And so you can just see that it's not the gap between the intersection between S1 and D1 and the intersection between S2 and D2 is very large. And it looks like it's, basically twice as much of a price cut to create a market clearing price as you would normally think that it would take in order to unlock that demand. But then the other thing that, Brian was alluding to earlier is that there's a huge amount of price elasticity of demand too. And, as you decrease in price, you unlock portions of the market that previously were not unlocked. And so I would say that this graph is maybe a little bit oversimplistic when you look at something like the auto market that is just highly price elastic. And you can see that, the number of units that a car that sells for $25,000 can sell is like drastically different than the number of units that you could sell at $35,000. And so you do have to kind of factor that in here. But I just think this is an interesting thing for us to think about as we watch prices come down, and we can see, hey, what is the demand at different price levels? And the one thing that I would also say, just to remember, is, don't forget about the things that Joe just has shared about Tesla's ability to innovate on the manufacturing front and drastically reduce cost of goods sold. So they have two major tailwinds going for them with respect to margins going into 2022 and going into 2023 that these are the positive. Everyone knows what the negative things are with reduction to margins, but here's the two positive things. We still have huge operating leverage, and we still are creating much more. We're reducing cost of goods sold by improving the manufacturing process and the engineering in the cars on a daily basis. If you can create 3 changes to a model every day, you are going to drive the cost out of your vehicles. And if you're legacy auto and you're not going to change the way that you produce that car for the next 7 years, and your cost of goods sold is too high, you're really screwed, because you don't have levers that you can pull to try to reduce your cost of goods sold. Whereas Tesla can continue to, they're reducing it daily, every single day, not every single month, not every single year, not every single 7-year budget cycle, every day. So anyways.
Yeah. Thank you for the explanation. Then I'll throw it over here to Richard and Brian. But so the way I think about this graph is, so the big question is, are electric vehicles going to be impacted by the shift of D1 to D2, right? So globally, are electric vehicles going to be less wanted in a recession? Is it going to shift from D1 to D2? And then the S line is a question of battery ramp and a question of lowering costs in the supply chain and working with suppliers to increase their ramp. So the way I think about this is, if my hypothesis is correct, which I'm trying to test every single day, that the demand for electric vehicles, even in a recession, is unchanged, because that's just where we're going next, and the number of people that are going to buy a car will buy the next generation of car versus the previous generation. In my head, it's like, okay, the D1 line remains, but it just becomes a question of increasing supply and increasing how many cars you can put out in the market. If you can do that, then S1 goes to S2, and then the price will naturally fall down because you're able to ship more and more cars into that lower band of the demand line, which is like your mass market vehicle or your $33,000 car, Model 3. So that's the big question. So like the D1 to D2 line is the big debate. It's the big debate that we're having, I think, across every single community as we go into this supposed recession. Will D1 to D2 impact Tesla and electric vehicle makers? And S1 to S2 will happen anyway, because that's where we're going. We're going to that next generation of EV. So the supply is going to increase. Richard and then Brian, go ahead. Or Brian, sorry, go ahead.
Yeah.
Yeah. I didn't read Cindy's message.
Okay, so I would say that
or Richard's.
The recession and this the used car potential collapse in prices is something that could impact Tesla and stuff like that. It depending on how bad the used car collapse is. It's already come back about 20%. Puts certain people who bought them on debt underwater, and so they're buying new cars and getting new loans, and then they could walk on the old loans, and that could create this cycle where the used cars go down. So I'm less. It's not just the new car situation. I think that for new cars, the share of EVs clearly goes up because gas prices are high, and you have that $5,000 a year thing to keep your thing fueled up and in repair if you have an ICE car. But the used car situation where you could pick up the cheap $10,000, $5,000 used car, just like you have the cheap EVs in China. In the US, you'd have the cheap used car. That could have somewhat of an impact on overall demand. But I think it's squeezing down from 14 million cars per year in the US down to maybe 10. But it's the US is a different animal from the new cars, used cars, because 2/3 are these, pickup trucks and SUVs and more expensive vehicles. So I think that if you're going to have this pressure on price, then you would go towards a $38,000, $35,000 Tesla. But with the Inflation Reduction Act, you're getting $7,500 off. Right, so if it was $3,750, it's $30,000 to you. So I think U.S. demand, no concerns. Europe, again, it could have certain issues, and China could have certain issues. But I think that EV will still hold, and Tesla shifting down into that 30K range, I think, should be sufficient to clear out all the vehicles for sure.
Richard, go ahead.
Yeah, so as I was roaring before we started, I'm going to go back and roar a little bit. And this is not an attack on Lee, but I'm appalled by how he's handling himself at this point in time. And I'll just give you an example. And I'll just be straight up front. So all my shares I bought in Tesla were 21, 22. So do you think that was a good time to buy Tesla shares? Probably not. But I continue to buy shares. So I'm probably upside down 75%. Okay. And not with insignificant money. So it's not like $5. So it's not insignificant. But my feeling long-term about Tesla has not changed one iota. In my mind, I was 2033 all the way. That was when I could hold to. If I could get out earlier, if the circumstances presented themselves, and the stock was high enough, fine. But I could stay for a minimum of 2033. So if the stock, I'm going to look at the stock price. If the stock is at 111.67 right now, I'm not going to make a decision about selling a stock that I'm holding until 2033. It's absurd. And I think and what he's doing is destructive to the stock price. We're not talking business here. The business is fine. We're talking stock price. And it's all psychological. I mean, like when stock's tanking, it's because everybody has that feeling. It may not have anything to do with the business. And some guy who's long and purporting to be a Tesla bull, who when his numbers turn out to be inaccurate, bails and then turns on the company, I find that absurd and destructive. And that's what hurts the stock price. And so his static chart may be accurate, but it's a static chart. It's a day in a life. It's basically a financial, it's a balance sheet. It tells you what it is today. But we don't know what's going on in China. We don't know what demands COVID has placed or not, and how that will change in the future. So the fact that Lee comes out with this nonsense pisses me off. And I am purely anti-Lee, and I unsubscribed. Just to let you know. He said, seems like a nice guy, so it has nothing to do with personally. Again, seems like a very nice guy. But in terms of how he conducted himself professionally, I found it disqualifying.
Let me be on the opposite side. What do you think about maybe he's trying to communicate to his audience that there are big risks coming ahead and that folks shouldn't be ignoring the worst case scenario? How do you think about that?
I think there's too much desperation that comes out of his communication. He screwed himself, I think, with options or something, and it comes out that he's stuck himself in a bad position, and he's acting out of desperation, and that's how it comes across to me. So whether he's trying to communicate useful information, I don't think it's coming from the right place.
Mm-hmm. Go ahead, Brian.
So so I guess the tweets were that he lost $10 million for his dad. He probably lost a lot of money for himself with however he did it. So given what Richard talked about in terms of like how things are being manipulated, whatever you're doing, you have to be able to ride out an absurdly low price for the next 3, 6, maybe even a year. Who knows? But the company is fine because it has $20 billion in cash, executing all of the things we're talking about. But because of how the stock market, the Fed, and things are, that things could be really stupid, disconnected from the share price from the company, could be disconnected for a year. So you have to be able to stay solvent through that. That's the whole thing of like the market could be irrational longer these days, and the market can stay corrupt, longer. So it's the kind of thing where you have to be able to last until that thing. If it means whatever, however you handle that is what you need to do.
Go ahead, Hans.
Yeah, I mean, I would say from inside the bubble, it definitely appears like Lee is on tilt. The mostly emotional, and he's going through a process of basically re-questioning all of the things that he had assumed. I'm not upset at him at all for being in that place or even for sharing that on Twitter, because I definitely respect people who have the intellectual honesty to go back and question their assumptions and to share that process publicly, because it does piss off a lot of people and it takes some courage to do that. Now, I don't necessarily think in this case that he's doing that from a place of courage. It does seem like it's mostly emotional. So I think I would agree there. But I, personally, I don't want to discourage people from being public in their thought processes, because I look at it as a learning opportunity to see, what are the different situations people can find themselves in? How do they navigate those situations? And, I like to see what he's doing so I can learn maybe how I would want to handle that in that situation, or shouldn't handle that in that situation, both positive and negative examples. And being transparent about that in public invites a lot of criticism, and either way, it doesn't bother me. I have joy in observing people. So, in the whole spectrum of things.
Go, Richard.
The reason it bothers me is because he's not transparent. He'd be transparent if he came on and said, listen, I lost my ass. I lost my father's money. So before you listen to
I
this
mean, he
advice,
did say that.
well, I didn't hear that.
Yeah, he said that on Twitter, and
Yeah.
he's made some specific. He's like, I'm probably emotional right now because I just lost a bunch of money and I had to close out a position for my dad's retirement that was really significant. And so, and that's part of the Twitter algorithm. Maybe the tweets that it's showing you from his account are only the ones that are really getting a lot of pushback on them, and it's not the other ones.
Yeah, I only followed him on YouTube, and I missed that, and then I stopped following him. So maybe I missed the disclosure. But I
that
think
was all on Twitter.
Okay, if he said it, then then that's great, and he should make clear that any advice he's giving at this point in time is based on that perspective. But anyway, it does affect the stock price, and it clearly is reflective of how he's performed, and that may influence his judgment as to how he interprets the stock or interprets the business.
Yeah, I think the sort of the thing that's, and what's funny is that this conversation right now is such a bubble discussion, right? It's like anybody that's not part of the Tesla community, they're like, who the hell is this Lee guy? Right? What are you guys talking about? So this is only like the smallest of the smallest part of the bubble really understands this. Yeah, I think I want to commend Lee for his courage to be upfront about that sort of toll that he's had. Like that's something. How many people will come out and say, I lost this much money for my dad? Like that's freaking crazy. That's a very personal bit of information that I think 99.9% of the population would be like, I will never share that publicly. But he was willing to do that, which I commend him for that. Now, do I feel that the sudden tone shift is abrupt and perhaps not rooted in some of the same fundamental thinking that he had for the long term of the company? I find that odd. I'm like, okay, so you were, like I had him on the channel and he set us all straight on the next 10 years of the Tesla. And I'm like, okay, yeah, that makes perfect sense. You nailed it. And then all of a sudden he's like, but everything's going to collapse. I'm like, okay, what's going on? Right. So it's odd, but I think it's contextualizing what he's saying is important. And maybe Lee, that this is maybe if you listen to this for whatever reason, perhaps a point of feedback is like, perhaps try to contextualize that a little bit better on all your platforms. Because, for example, for Richard's example here, if he's just following you on YouTube and he's only catching some of what you're saying, it could hurt your ability to communicate clearly. And this is what's so difficult about having a platform is like, at any point, a new person's going to be listening to something that they never had, but they don't have the context of the previous stuff you've said. And so they're going into it with a completely different mindset, like, yo, what the hell just happened, right? Although in his head, he's probably like, well, I already laid out all the fundamentals of how I'm thinking about this. People will understand. But clearly, that's not the case unless you're very careful in how you communicate. But it's just, I think ultimately, the lessons that are being learned in the last 6 to 12 months as a Tesla investor cannot be ignored. We have so many lessons to learn from in these last 6 to 12 months that are going to be just so giant in our individual ability to think about these types of crazy turns and twists that we face as investors for the next bear market, or for the next perceived top in the market, or trying to identify signals that say, hey, you're probably approaching some place that is going to go down like crazy, right? These are my biggest takeaways. And I think ultimately, net, what Lee is doing, I think is positive because of that transparency of coming forward and maybe being very open about his emotional state. Do I disagree with him? Of course. But do I find it not valuable? No, I actually do find it valuable because, like Hans said, it like allows me to like put that frame of reference in mind and be like, okay, maybe I like Lee a lot, but maybe I shouldn't be like Lee right now. With all due respect, right? Yeah, so that's my 2 cents there. What, any other thoughts here on the topic from anybody?
Or there is an outside chance that maybe we should, and so that's the value in having people who will say those
Fair.
things. Is that I think I'm in the bubble. I think that more than likely, I don't believe that the EV trend is broken. And that's basically what you have to believe in order to be shaken on the long-term thesis. And so, no, I'm not going to agree on something like that, but I need people to say things, and especially the fact that it's coming from Lee and not Gordon Johnson, people will take it a little bit more seriously within the community, and they honestly should. Now, they may walk away and say, no, like, I'm going to address each of the points that he makes on a point-by-point basis, and I can say, I don't agree with you here on this point, and this is exactly why. If you can't do that, you may actually need to reconsider your position in the stock, because you don't have a personal fundamental understanding of the business and whether or not you should or should not be invested at this point based on your risks. And, and also with how much money, is it with money that you can absolutely afford to lose and you absolutely do not need to touch for 5 to 10 years? Or is it with money that if you lose that money, you actually can't make house payments? Those are two different situations. And so anyways, yeah, having those challenges to your thesis are very important. There's no serious investors who are going to perform well over the long term who don't regularly battle test their ideas. And, I think that's one of the things that we're trying to do in this forum. And I would say various parts of the Tesla community are better and or worse at that.
Yeah, well said. Go ahead, Richard.
Yeah, I was going to say, so I disagree with Hans about 48%. I think the information is really important, but I think you have to get it from a neutral source, because I just don't trust it from a biased source. Just like I don't trust and don't consider. If I hear numbers from Warren R., also a former attorney, Tesla bull, I consider that 0%, because he's too slanted. And I'm a lawyer, so I look at everybody and see what their bias is, and I factor that in. And I don't give the same credibility to information based upon or from people that I perceive a bias. So I don't think it's wise to just accept information without digging deeper to understand the point of view that person is coming from. And you can find the information. It's just a matter you have to hunt a little more. So that was the 48% I disagreed with Hans on.
I think you just got yourself an attack video, bro. I'm just kidding. Shout out Warren. Any other thoughts around this topic? Brian, Hans, Richard? No? Good. Yeah, it's and again, I want to close this topic off by saying that I've had Lee on the channel. Lee, you're welcome to come back as well if you really want to like have a place where maybe go more in depth about the way you think, or do it on your channel. I encourage you to do it on your channel. Just take maybe like 30 minutes to an hour and sort of level set your mindset, because you do have a following that really listens to you, and you bring a lot of valuable insight, and you have every right to feel or think or communicate the way that you want, and that's why you have a platform, and such a good one at that. But I would encourage you to maybe take a little bit of time and see if you can perhaps level set the expectations for folks, because I think I am noticing some confusion, and yeah, just feedback.
I would love to see him do like a bull bear debate with somebody on, whether it's here or on his channel, someone who is a thoughtful and not sensitive, but just tactful. Like, I don't want it to turn into a slugfest, but I'd like someone who can intellectually challenge him point by point on his, like, I'd love to see a Matt Smith, Lee, back and forth on the thesis. I think that would be great.
I like that.
Something like that.
Actually, Matt's coming on the channel on Wednesday, so Lee, if you're listening to this, let me know. I'll hit you up in DMs too. And we can make it into a debate. Yeah,
Warren, that would totally be the same exact type of episode.
I don't know if he's going to come on now that Richard has freaking.
just to be clear, I love Lee. I think he's a great guy, and nobody should personally go after him or whatever. That's not what that wasn't intended by my message. He's wonderful.
Wonderful. Okay, let's do maybe another 5 minutes. Maybe any last topic we want to hit, and then we'll do some Q&A. What's one thing you guys want to cover before we hit Q&A here for the last 5 minutes or so? Is there anything, or we can do an extended Q&A? What do you guys think? Maybe extended Q&A. do you guys think about extended Q&A? Yeah?
I mean, the only other thing that I would say we could bring up if we wanted to talk on it, does anyone have a specific thing that they wanted to talk about for the investor day that's coming up in March? I know that's another big piece of news that dropped this week that we haven't discussed.
I have some
Delivery
thoughts, but
date.
I'll let you guys go for it. Yeah.
Yeah, the delivery date for Cybertruck. I want them to tell us on March 1 that Cybertruck's first deliveries are going to be September 1, something like that.
Hey, I want them to say March 1, delivery date is March 1. Here, have some Cybertrucks.
Good luck with that.
I'd like to get more insight into the Megapack, the Megapack ramps, some insight into how long it takes to install them. Like, once you take it out of the factory, what's the rough timeline issues around that? It's the details that's kind of important to understand how that would be, and how that, if they're going to make mega charging stations, how they would roll out, like how much of their own Megapack capacity they're going to be taking over the next few years, how they view that. And then also the semi-truck ramp, how much do they do themselves, and how much are they doing it, and again, more detail on that ramp. Because I think that is potentially in a few years, both the semi-trucks and also the impact on Cybertruck, because you can make a level 4 vehicle from a Cybertruck if you were to. So currently the Cybertruck weighs about 6,000 pounds, and they said it could hold 3,500 pounds on top of it, 9,500. If you increase that total by 6,000 up to like 15,000 pounds, then you're a class 4 vehicle. So it was not how much you tow, it's how much sits on top plus your vehicle weight. So that's like a Ford F450, Ford, because the Ford has F150 up to 650, which is, and the number is basically like the class of the vehicle. A 350 class 3 vehicle, 450 class 4 vehicle, a very innovative naming system that they have there. So a class 4 Cybertruck, the huge thing for that is that currently California gives up to $132,000 per class 8 vehicle, and you can get $60,000 to $80,000 for a class 4. New York is giving $185,000 for class 8 vehicles and $100,000 for class 4 vehicles. So there's other places, Canada, Europe, all giving these kind of like for the working truck segment. So that could, totally address that. And also knowing for the Cybertruck, under load, what does the range do? Because I looked at the videos on that for Rivian and for F-150, the Diesel, as well as the Lightning. And basically the F-150 gas vehicle goes from a 23-gallon tank, a 23-gallon tank with 20 miles per gallon, 460 miles, and then drops down to 9 miles per gallon, 207. So that's your up to million selling vehicle globally, had that kind of drop to 207 under load. So if, and currently the electric vehicles go from like 300, 400 miles of range, and then drop down to 100, 120, 140 miles of range. The Lightning does the worst on that. And then Model X and the Rivian do better. So if Cybertruck with semi-tech drops down to only 250 miles of range from 500, something like that, or from 400 down to 200, then you're pretty much beating or as good as an F-150 gas vehicle. So then, so that how much range under load you have is a huge factor in how much you blow out the work vehicle market. And I think that the reason I'm very hopeful about that is because the semi, if you don't have load on the semi, you're dropping from 40 tons with everything, vehicle, trailer, and whatever, 40 tons. And then if you're empty, you're down to about like 7 tons, right? So that at that 7-ton thing, you're not going 1,000 miles with that thing, right? So it seems like they're dropping less than half, down to 560, 530, right? So if you go from 500 miles on a Cybertruck down to 250, you're 20% better. You win, right? So that's, if that happens, then it's, one, all the work guys, contractors, rolling around in F-150s, regular work trucks will say that works under load, and then they get 60, 80%. You'll have to re-rate, and you have to say, holy crap, the $2 trillion truck market, $1 trillion for the semi truck, $1 trillion for the smaller trucks, $2 trillion market, when you can totally address that. And then I think they have a 10-year lead on that. So I that would be, in terms of like the 2030 bull case, is 2028 or 20, that's like how big and how fast. So how they can do it, and then how many can they make? If they could tell us, yeah, we can make 500,000 or something like that, and then we're gonna start a new factory, that would also be huge. So.
Good, Hans.
Yeah, I would say this is tying into that a little bit, and then going to the demand domestically here in the United States, that if the numbers that Hertz are putting up are something that can scale across other types of commercial fleet operators, that commercial demand alone should be an incredible tailwind for EV sales here in the United States. Yeah. So anyway, that was just the one small point that I was going to add. And I was thinking about it because that's going to be both Model 3, Model Y, but also incredibly Cybertruck as Cybertruck begins to ramp deliveries as well. So what do we think that they are going, like, what are the predictions for what the investor day will have for us? What are they going to talk about? What are they not going to talk about?
Yeah. So so on the verbiage and the producer wife, if you can bring up the one of the very first ones I sent you a couple days ago for the investor day in Discord, if you can pull it up and find it. The next few gigafactories are going to be outlined. I think we're going to get at least an announcement of one, if not before then. I think buyback plan will be announced, because they're talking about some sort of like strategy for the capital. Thank you very much. We plan to host Tesla's 2023 Investor Day on March 1st, 2023. The event will be live streamed from our Gigafactory, Texas, with the option for some of our institutional and retail investors to attend in person. Our investors will be able to see our most advanced production line. So this to me sounds like Model Y, for sure, single piece casting with structural battery pack, maybe Cybertruck, with the Hydra and all that stuff in there. So that could be freaking fun. Long-term expansion plans to me sounds like some sort of combination of gigafactories and maybe master plan part 3. That could be a potential in there. Generation 3 platform, to me, I don't know how that doesn't scream robotaxi / compact car. Like, I just don't know how that's not the case. So I would love to hear any pushback on that, if there's any. And capital allocation, to me, sounds like buyback. And what's our strategy with the ridiculous amount of cash we're going to generate this year, which I think in part might allude to the fact that, hey, even in whatever scenario we're going into, Tesla is going to generate cash, which I think bodes well for the long-term prospects of the company and perhaps of the stock as well. What do you guys think?
Those things sound about right. That I'm not sure you would reveal like other stuff, but like if they could give details on Cybertruck and energy, those would be good to know.
Yeah.
So on the Generation 3 platform, do you think that they will reveal specifics, that it will actually be like a product reveal, or will that be separately and they'll just kind of talk in a loose way about general plans, but not necessarily reveal a model?
Yeah, Yashua and I talked about this yesterday. It's kind of like, so I think we both agreed yesterday that Generation 3 platform will be a China only first. So it will be released in China first, maybe for the first 6 months to 12 months will be only available in that country, because I think that is the obvious next step for Tesla to go into in that market, especially with the Shanghai cranking out over 1 million units per year of 3 and Y. And now that they've cut the price to try and enter that sort of sub-segment market, that the obvious thing is to release that. So maybe it's preparation for that says, hey, the Chinese market's going to get this car here in the next, I don't know, 9 months or 12 months potentially. But Yeah, they have to be careful with the Osborne effect, though, right? Because that's another thing we're throwing around. It's like if you announce too early, then 3 and Y get hammered in China. People might just wait to buy that cheaper vehicle, unless they're like, hey, guess what? Because think about it, the Model 3 rear-wheel drive in China is $33,000 equivalent, and Tesla's been talking about cutting the cost in half of this next thing. So is this a compact car for under 20,000 in China? Potentially, I don't necessarily know. I don't think you have to really maybe wait to announce it if it's really going to be that much cheaper, because it's just a completely different class of vehicle. So if you can really go that low on the market segment and enter with something below 20,000 equivalent, I don't think your Model 3 and Y will be impacted at all. It would be your Volkswagen Golfs and your sort of like Renault Zoes and all these like type vehicles, your Mercedes A-Class, these like smaller
BYD
cars that are going to
Seal.
get BYD Seals. These are the cars that are going to start getting hammered hard. And it's just about timeline. Yeah, go ahead, Brian.
So they have also the Highland, the Model 3 Highland. So they already dropped 33,000 without doing Highland. So Highland is they're adjusting,
Margin.
front and rear castings. Maybe it could be something. The question is, can they shift the lines to do that? Like if there's soft demand, it can go down for just a month. But the main concern is that Model X and S had that long ramp up period for going over this. So what lesson they learned for that, and how fast could they do the switch? Because clearly, if you could take out with modest changes for Tesla, take out another $5,000 out of the vehicle, so that you can drop down to the $25,000 vehicle in China with the Highland, right? Then or $26,000, $27,000. Then yeah, it definitely seems like you would go to $20,000 or less for the model, the
Gen
Model
3,
Compact.
whatever.
Yeah, Model
Yeah.
T. Yeah.
Is there any chance that they were making those maybe at least a step in that direction, if not going full front and rear castings for Model 3 in Shanghai? Like, is that part of the downtime in December?
That would be a surprise, I think, to many, because I think the some of the leaked documents said Q3 of 2023 or Q4 of 2023. That would be a shocker, because then that implies that the price drop in China for Model 3, the margin implications are probably net zero, because that the Model 3 is the least efficient built mass market car that Tesla has, because it has doesn't have all the mistakes they made they put it in the Model 3, and all the great things they built to put it into the Model Y. So the Model 3 has the largest room for upside. Go ahead, Richard. I think
Yeah, and from a practical standpoint, I think there were COVID shutdowns at the factory and they weren't operating. And I saw yesterday some video of the trucks lined up in a queue at Shanghai, and it appeared that was the first day they were back. So I think activity was light during those 2 or 3 weeks. So I don't think they were doing anything of a substantive, significant nature there.
Yeah, but again, it's like this is the true differentiator between a Tesla and a competitor. Is like, yeah, they might drop prices, but they're going to make it up in the backside, because they're lunatics. They're a bunch of engineers who stop at nothing to make the car as efficient and as low cost as humanly possible, which in the long term bodes really well for margins, I think. But let's go ahead and do some Q&A here. We only have about 10 minutes. Thank you all very much for great, lively, I think, valuable discussion. I hope everybody in the comment section found that as well. But producer wife, let's go ahead and bring up the questions from our community, but only the best ones, which is all of them. Haha. So go ahead. Let's do the first one from JMac. JMac, question: at what price does Tesla become a takeover target? Whoa, stock price, right? This is an interesting question. Boy, I don't know. What do you guys think? This is a weird question.
I don't think it becomes a takeover target, because Elon still has if you exercise the options, has 25%, and then you have Kogwan Lee, you have Ellison, you have enough, I guess 40% retail too, who you could get over half if they say, says, okay, we don't want to be taken over, over 50% would say, yeah, we're not going to be taken over. So I don't think it can it can happen. And then he has other money, other.
Corwan could flip, man. His Twitter account has been a little wild these last few weeks. What do you guys think, Hans or Richard? Thoughts?
I mean, I would echo Brian. It seems, I guess I don't understand the underpinning, like how that would work well enough to have a strong opinion on it. But I would just be shocked if that was something that was possible at this point in time. Obviously, it's more possible now than it's been in a long time. But even at that point, I just, don't see how that could be.
I think Elon plus insiders is just slightly over 50%. But to be honest, that's one thing that concerned me about the Twitter sales, is because his interest in his actual percentage interest in Tesla keeps on decreasing. And at some point in time, if he continues to do that, there will be somebody who could challenge his dominance there. And if I were going to say who would be who could target a buyout of Tesla, I would think Apple. Apple could do it. And if they wanted to get into the car business, like I haven't ever heard that Apple wants to get in the car business, but if Apple ever wanted to get in the car business, they have the wherewithal to effectuate a buy.
But the other thing would be that if you take it over hostile and you don't have Elon and you don't have the key guys, what do you got? Yeah.
Good luck. You're stuck with an automaker at that point. Good luck with that. Yeah. Next question. Great question, J-Mac. Thank you. A challenging question for sure. This is the next one. JR, question. Chinese yuan has increased a lot to USD since Q3 report. Shouldn't this offset the price cut a fair chunk? Have any of you modeled this into your China margins estimations? That's an interesting point. How do you guys think about this?
For the Q4, China's currency was still at the weakened level. So 2 months, it dropped in December. So 2 or 3 months, it was at the higher level. So to me, it looks like average exchange rate was about the same between Q3 and Q4. So it doesn't affect it yet. It would improve things in Q1, assuming the China currency improved rates continue.
Okay. Richard or Hans, any thoughts there?
Yeah, I've modeled it into all my models. It's in every single one I've done.
You should share it.
Next one. Juan, question. What market does the Cybertruck serve specifically? This is a fascinating question because this is the underpinnings of why I think Cybertruck is going to be so successful, because it appears to be a brand new market that it has never existed. So when I think about Cybertruck, it's like a Ford Raptor, F-150 Raptor, which is like, if you ever seen them in the US, producer wife, if you can find a picture of a Ford F-150 Raptor, it is a sick looking truck. But it's like, you can see that the form factor is similar, where it's really made for off-road. It has a lot of clearance in the front. It doesn't have the typical low bumper. So it's made for off-road, but it's electric. And it's the cost to operate that thing versus a Raptor is probably 1/5 to 1/10 total cost of ownership, versus a pickup truck, because the amount of gas and potentially diesel you have to put in that thing is a lot. It's very, very expensive. But with a Cybertruck, it's going to be much, much cheaper. Yeah, perfect. So if you can maybe go to the gallery for me, is there a gallery button somewhere over there? Key features, maybe under models and specs somewhere, or explore F-150. Anyway, we can find it. What do you guys think about the question? What market does Cybertruck serve specifically? Sorry, Brian, we got you hidden with the comment bar.
No problem. So I shared a link which has the Bureau of Transportation Statistics table on number of truck registrations by type. So
if you can bring that up, producer wife, that'd be great.
So the U.S. has about like 160 million of these pickup trucks / heavy SUVs and that kind of stuff. Out of a total of about I think 260 some million vehicles. So the U.S. is filled with a lot of heavier vehicles in there. So I view the Cybertruck as competing against both the pickups and somewhat of the SUVs as well. That they're competing in both those markets. And then if they have the the range under towing, where they can move a lot of stuff. Then they get to the work trucks, which is about 40 million of the US vehicles are that. So that I think is the, and then of course of the global market where you have smaller trucks, a lot of them in Asia and other places. So you have quite a large segment that is what the Cybertruck can potentially serve as they get more capabilities. So for certain markets, commercial vehicles, can you tow the large amount efficiently? And then for others, where it's just like competing against an MDX or an F-150 or some off-roading vehicle.
Yeah. Trying to get this thing to show more numbers. Anyway, but what we do is let's share the link in the comment section so people can look at this on their own, and then we can move on here. Hans, any thoughts around Cybertruck?
Just I've said this before on these streams, every segment that Tesla has entered, they basically destroy the traditional boundaries of that category. And so, the Model 3 in the luxury premium sedan, it outsells anything in that class. And you see a lot of what's called the Tesla stretch, where people who would normally buy something like a Camry or a Prius or something will upsell into this traditionally different category. I think the thing is that these are new categories of vehicles, and they're competing against old categories of vehicles. And so it is creating its own segment. And yeah, I think once fully ramped, if they're able to sell these at price parity with current gas vehicles, it's going to absolutely just destroy these categories as well. I think that if they can produce 2 million Cybertrucks several years from now, that they can sell 2 million Cybertrucks. And you'll have a variety of buyers with a variety of needs all coming to that. Like if you can buy a $40,000 Cybertruck, if they're able to produce at that price point down the road with economies of scale, and they've indicated their intention to do that as long as inflation doesn't get too out of hand, then you could see buyers who would normally pick up something like a RAV4, are much more interested in getting something like a Cybertruck, especially if they make a little bit smaller vehicle that can seat the same number of people as your RAV4, but you're driving an electric vehicle and you look badass instead of this little toy car. So don't underestimate the number of soccer moms who want to drive around in this big old beefy tank. And talk about safety, that's going to sell a huge, it's already an underappreciated aspect of Tesla's brand. But, my wife wants to drive a Toyota Sequoia because it's a big old heavy safe tank, and you don't have to be in a minivan with kids. And, I think there's a huge number of people who, we just know this about the United States. We all want to drive big old cars. We're not going to get shoehorned down into some little Fiat 500. And, Cybertruck is well positioned to capitalize on that aspect of American culture in a way that, like I said, will just destroy categories.
Yeah. I think, go ahead, Richard.
Yeah, I was going to say, and even though Tesla gets criticized every time FSD makes a right turn as opposed to a left turn, that car that fell off the cliff and the two kids were barely injured, that's a huge statement. I mean, it's a bad circumstance, but it's a huge statement of safety. I mean, to me.
Yeah, couldn't agree more. Yeah, man, I don't think people are ready for Cybertruck. Everybody almost forgot about it with all this noise. 2023 is the year of Cybertruck. Look out. If you haven't seen one in person, I highly recommend you see one before it hits the roads, because talk about a statement. Let's do one more, and then we'll go over to our private Discord. You all see Peter Zeihan tweet dissing Cybertruck. I used to follow Peter Zeihan, and then I stopped because he was wrong 98% of the time. And so I really take the words he says with a grain of salt. How do you guys feel about him? Nothing personally, Peter. If you watch this, I'm sure you're a great guy, but I just can't trust what you say. What do you guys think?
Yeah, I follow him closely because I have my blog talk about future stuff, and so his bold big statements are interesting. He simplifies analysis, but the problem is that he makes things too he does a simple analysis, say about population and age bands and stuff like that, and then he, makes some broad statement that this will happen. He's described like a 10%, 20% headwind, and then he says because of this, China will blow up. The China economy, and he's calling that for like 20 years, and then he'll say, and because of something, looking at a snapshot from 5 years ago of what the mineral components is of vehicles, electric vehicles, then electric vehicles won't be able to scale because you won't be able to scale the mines or something like that. So his thing against EVs is that, we're going to, run out of cobalt, run out of nickel, run out of this, and cobalt and nickel are not in the iron LFP batteries, right? So he doesn't look at any kind of like, and how about the other side, right? He just says, okay, I'm going to have something I can present in a few pithy quotes, and then I can make these broad statements of, and this will happen, ignoring all complexities. And so, him dissing Cybertruck is just like he's dissing EVs too. He's saying that, it can't happen, physically impossible minerals and something like that. It's like, he don't consider any of the science stuff, any new technology stuff. He doesn't think deeper on that. He just like, I have this a chart-based thing, and thus it can't happen.
Hans or Richard? Thoughts? No? Okay.
Yeah,
Go ahead,
I stopped following him before I started.
But thank you all very much. We're going to head over to our private Discord to continue this discussion. If you'd like to be part of that community, consider becoming a patron by using the description, the link in the description below. You can also do that by signing up through YouTube, right? By clicking join somewhere here if you're on desktop, I think. Actually, not here because I'm not fully blown up, just somewhere below. Anyway, Richard, Brian, Hans, thank you guys so much. Very lively discussion. I hope it was of value to our viewership. Before you leave, love it if you hit the like button so more people can see this. And let's take it over to the private Discord. All right, everybody. We'll see you around. We'll see you guys on Discord. Take it easy, everybody.